It's 1.1 versus 5.1. The percentage, the performance of silver percentage-wise was 5 times the move of gold. Today, this is just one day, but what if it were 1 week or 1 month or 6 months of silver outperforming gold 5 times percentage? And when you step on price of silver, the way that 8 commercial banks are holding the largest short position, concentrated short position on silver of any commodity ever traded in the history of the COMEX, the largest concentrated short, illegal at that, CFTC, where the hell are they? When this really starts to break because the rest of the world is wise to what we're doing, the potential is limitless.
In a fascinating turn of events, the precious metals market is witnessing a notable shift, with silver emerging as a potential star performer. AndySchectman, CEO of Miles Franklin Precious Metals, has observed a significant uptick in gold and silver prices, with silver appearing remarkably undervalued compared to its golden counterpart. This development has caught the attention of investors and analysts alike, potentially signaling a return to historical norms in the relationship between these two precious metals. Sprott Money's recent analysis paints a compelling picture of silver's imminent breakout. Using a median gold-silver ratio of 80-1, their projections suggest that if gold reaches $2,300 per ounce, silver could climb to $28.75. Even more intriguingly, with gold touching $2,500, silver could hit $31.25. These forecasts highlight the substantial upside potential for silver if it realigns with its historical relationship with gold. The current market dynamics further bolster the case for silver's undervaluation. The gold-silver ratio currently stands at 86-1, significantly higher than both the median above of 80-1 and the 20-year average of 68-1. This disparity suggests that silver has considerable room for growth, despite already outperforming gold year-to-date, with gains of 28% compared to gold's 23%. Schectman emphasizes silver's impressive recent performance, noting that while gold increased by $30, silver's $1.60 rise was more substantial in percentage terms, 5.1% versus gold's 1.1%. This outperformance underscores silver's growing momentum and appeal in the current market landscape. The bullish sentiment surrounding silver recently culminated in prices surging to $32.71 per ounce, a level not seen since December 2012. This rally has been attributed to strong bullion trends and China's economic stimulus efforts. With gains exceeding 35% in 2024 alone, silver's performance has been nothing short of remarkable. Before watching the video, please subscribe to our channel, hit the bell icon for notifications, and share this with anyone who might benefit.
Gold and silver taken off for sure. It's just become obvious that silver is massively undervalued in its relation to gold. And we can get into the reasons why. We've talked about many of the reasons why. But today was an example of what you could expect to see when things get back to where they're supposed to be. Just reaching historical levels of man's ratio between the gold silver, let alone the geological ratio. Man's ratio is somewhere in the 42 to 43-1 over the last 150 years. That was with the geological ratio at 16-1, but silver's disappearing. And now it's 7-1, and its uses are going higher. And this is why you're seeing such massive overt attempts not only to hold down the price of silver, but for like the Chinese to fly around the world buying doré and concentrate from Latin America to mask how much they're really accumulating, even as the second largest producer of silver in the world. But today's a good example of what you could expect to see. You know, gold's up $30, huge move. Silver's up $1.60. It's not as impressive as $30, but take a step back and look at the percentage. It's 1.1 versus 5.1. The percentage, the performance of silver percentage-wise was 5 times the move of gold today. Now that's just a microcosm. But this is looking at silver, which right now is at the tip of a 40-plus year. Was it 40? I think it's a 40. A 40-plus year cup and handle formation. Is it 40 or 24? I'm not sure. But a massive cup and handle formation, which is hugely bullish for silver. I just think that this is one of these deals when the thing finally goes to where everyone has been talking about trading their silver into gold at some point, perhaps, when the ratio corrects. This is how it will look. This is just one day, but what if it were 1 week or 1 month or 6 months of silver outperforming gold 5 times percentage. And when you step on price of silver, the way that 8 commercial banks are holding the largest short position, concentrated short position on silver of any commodity ever traded in the history of the COMEX, the largest concentrated short, illegal at that. When this really starts to break because the rest of the world is wise to what we're doing, the potential is limitless. You go back to 1933. This ounce of gold was $20 gold piece, and here's a $20 gold certificate. They were interchangeable. If you had 500 $20 bills since 1930 in a shoebox that Grandpa left you, along with 500 of these, which was the same amount in 1933, this 20 grand, what's that worth? This is worth way over $1 million. So the point of it is that gold doesn't make you rich. It retains its purchasing power. And this is a bathtub, and this ounce of gold, well, this is sitting on the ledge, right? And the water underneath it is the value of the dollar. If I pour the water out or pull the plug on the water, did the price of gold go higher, or did the dollar just sink? And Richard Russell always said in the end, it's the number of ounces that you own. You won't even remember what you paid. And he's right. Yeah. It is about the number of ounces. Yeah, it's great if we can get the best price, but it shouldn't be your main determination, because this is worth a lot more than the money that you use to buy this with. And it's only getting worth less and less and less and less and less, or in this case, more and more and more and more and more. The generics give you the biggest bang for the buck. The maples would be second. That's the silver metal. And to me, gold, and I say silver, I'm talking bronze, silver, gold, like Olympics. Number one, in terms of what if I had my choice, it's gold and silver eagles all day long. And the eagles is not as good as it is in just about everything else if we're just simply talking biggest bang for the buck. The maples would be a very close second. They're the purest silver coin in the world at 9999 fine. They're made in North America. They're easily recognized. For me, buying gold, I don't compromise. I buy eagles over maples. In silver, I'd rather have eagles, but I have no problem with the maples. They're more pure coin, and they're a couple bucks an ounce less.
AndySchectman has highlighted a significant shift in the global perception of silver. Once viewed primarily as an industrial metal, silver is increasingly recognized as a strategic asset with far-reaching implications for various sectors and economies. This evolving perspective on silver is primarily driven by its expanding range of applications, particularly in industrial and medical fields. Unlike gold, which sees only 10% of its production directed towards industrial use, silver's industrial applications consume over half of its total production. This stark contrast underscores silver's critical role in advancing technology, supporting manufacturing processes, and enhancing healthcare solutions. As a result, the strategic demand for silver has elevated its significance in global markets, distinguishing it from its golden counterpart. Schectman reveals that China, already the world's second-largest silver producer, is employing a bold strategy to secure vast quantities of unrefined silver concentrate, mainly from Latin American sources. By offering prices double those of Western buyers, China effectively dominates a significant portion of the global silver supply chain. According to Zero Hedge, this tactic allows China to lock in silver supplies before they reach the refined market. This strategic move enables China to avoid directly influencing spot prices while simultaneously edging out Western buyers. The implications of this strategic accumulation are profound, raising concerns about future supply dynamics and price stability in the global silver market. Let's get back to the video.
I think it's just a realization around the globe that silver has become not an industrial metal, but a strategic metal. It's a realization by countries like India, let me just look at the exact number here. Their number up year to date. So last year was a huge number in the amount of silver that they imported. And last year, their number was 560 tons through the first half of the year. Right now, through the first half of 2024, their number is up 4,554 tons, or up sevenfold from what it was last year, which was a record year. That's India. And of course, like I said, China, the second largest producer of silver in the world, they're flying around all around Latin America, buying up the doré and the concentrate, paying twice what the West will pay. Then you take a look at, from a bullish standpoint, a massive cup and handle formation. And then the Fed cuts. For the first time in 2 years, we're seeing positive inflow into the ETFs. And that comes at a time when the Fed is cutting. And when a massive bullish wave of reasoning, mostly accumulation by the BRICS countries, it's all converging together. And silver has been massively stepped on. According to the War Production Board, it's only a matter of months before war demands will increase sufficiently to require at least 200 million ounces a year. That's in 1942. You can Google this right here, S.2768. Here are the demand numbers from the Silver Institute. Industrial, electrical electronics, photovoltaics, that's solar panels, brazing alloys and solders, other industrial, photography, jewelry, silverware. Where the hell's military? In 1942... we needed 200 million ounces. Today, we don't need any. Here are the London vaults right here, where you can see this is how they're beating us. They're draining the exchanges. Of the 800 million ounces or so that they have in London, over 500 million belong to the ETFs. So you got 300 million ounces there. And yet this is the same exchange that admits to trading 2.9 billion ounces of silver per day on an 800 million ounce stockpile, of which 500 million doesn't belong to the vault. It belongs to the ETFs. And so I think what's happening is that the real laws of supply and demand are catching up with the ability to suppress the price. And I will say it again, you can only successfully manipulate a market over time by pushing in the direction it's going. You can't hold back a tsunami of global demand. And especially when the demand is from the wealthy, sophisticated central banks who can match blows tit for tat with the West. And that's the difference. Then it's never been this way, and it is now. Most of us don't believe that this is real because it's like, it's like the little boy who cried wolf. Well, every time the price gets up, it gets hammered. But yet I've never seen a market with such strength and resiliency keeps coming back. And this is at a time with a positive real yield, a strong dollar, and ETF outflows for the last 2 years from the West, which are now just starting to turn up right at the same time the Fed is pivoting. Right at the same time, you're at the cusp of a massive cup and handle formation, massive central bank purchasing, just less than a month away from the BRICS meeting and 6-8 weeks away from the biggest election of our lives. There's so many reasons to be buying gold and silver right now. It's not even funny. But the last reason is to become wealthy. It is wealth. And the most well-informed traders in the world, the central bankers, are proving that with their constant acquisition, driving up the price, despite all of the negative things I just mentioned in the West, which now seem to be moving in the other direction. So yeah, last month, 8.1% of all the available silver in London was delivered. 8%, 25 million ounces. Who's got that kind of bread? That was delivered in 1 month. Goodbye. That ain't never coming back. Never. And of the nearly 3 billion actual ounces traded per day in London, they say it's 290 million, but they say it's 10 times understated. Okay. So roughly 2.9 billion ounces, 90+% are paper contracts. And if someone said, give it to me, well, sorry, I don't got it. Can't get it. So that's when the all at once moment happens. And that's when the Western exchanges lose. And the central banks of these countries are not accumulating Bitcoin the way that they are.
Gold and silver are increasingly recognized as valuable assets amid economic uncertainty. Silver's dual role as an industrial and investment metal enhances its versatility. The widening gold-silver ratio and rising demand from China and India indicate silver's potential for significant price growth ahead. What are your thoughts on the future of gold and silver? Share your insights in the comments below. We'd love to hear from you. If you found this helpful information, please like, subscribe, and hit the notification bell to stay updated with our latest content. Thanks for watching.